Good afternoon, everyone, and welcome to our Managing Partner webinar series, The Future of Law, Law Firm of the Future. And we've got a repeat panel, and delighted to have this group back to talk to us about PPP loan forgiveness. And Scott Burke is our partner in charge of crime. He's going to be facilitating most of our conversation today. Scott, how you doing?
Glad to be here, John. Staying healthy, staying sane.
Fantastic. It seems to be, more and more difficult to do, but glad to have you with us. And joining Scott and myself, we have Uri Gutfreund, and Uri is our co-host. This is our 15th webinar. So Uri, good to see you as always.
Thanks, John. Good to be here.
Pleasure to have you. Dan Mayo. Dan is with Withum, a CPA firm based in New Jersey, offices scattered around mostly the Northeast. Dan, great to have you with us.
Thanks, John. Great to be here.
And finally, she's in the room, but you can't see her, Lisa Murray. Lisa runs the professional banking group at Citizens Bank, and within that, the law firm group. And so Lisa, so glad you're here, but sorry we're having technical issues, and you can't be on screen, but we're glad you're with us as well. Here in spirit. We have today 190 plus or minus law firm leaders registered. So a very timely topic, an important topic as we look to year end and planning for 2021. And Scott, I pick on Scott. He, I think among all the managing partners, part of our MPF community, he knows this PPP loan up, down, and sideways. And so that's why I invited Scott to lead our conversation. And we've done quite a bit of homework, and we're going to do the polling questions as we usually do and start formally in about 2 minutes.
John, let's be honest. I volunteered to moderate because I have all the questions and none of the answers.
I don't even have the questions. So that's good. We appreciate it. We got a lot of questions from you all as you registered as well. About 70 of them, and Uri mines through those, and we'll be working those into our conversation, as well as our polling technology. Folks love the benchmarking data we generate, so we'll be sharing some of that as well. You completed a few questions when you registered, and we'll throw some audience polling questions into the mix during our conversation. So I got my eye on the clock. I'm still at 1:58, so we have a few minutes.
Yeah, John, I think it's interesting to note that, 2 points. Number one, as year end comes to as we get closer to the year end, it is amazing how important PPP became. I mean, there were so many things on our mind in March and April. I think everybody thought this was going to be a big deal, but as we get to the year-end close, I mean, that's why so many people are coming to this event, and this is such a hot topic. It's because this is really a significant event for many law firms. So that's I think, why it's so important. And then lastly, just to point out, this is the only panel we brought back, John, of the previous 15. So Scott, Dan, Lisa, the two-timer club, I mean, welcome.
Uri and I are picky when it comes to panelists, so
yes.
Yeah, you
tell
did
them
a
what
great
they won,
job.
John. The two-time winners. Tell them what they get. Coupons.
The first one, it was by far our most popular of the 15 webinars we presented to date. That first program on the PPP loan, a lot of questions, a lot of ambiguity. So you all did a fantastic job. And so glad you're willing to come back and bring us up to date on this topic. So I'm looking at the hour, and I have 2 o'clock Eastern time. So let's go ahead and get rolling, ladies and gentlemen. Glad you're here, and welcome to our MPF virtual webinar series, our 15th. Most of y'all know me. We've been running these with Uri for a good while and hope to get back to some live programming next year. Stay tuned. hoping to pull off our annual signature event May 5 and 6 in Atlanta. And I'm sure we'll be talking about the PPP loan then. So glad you're with us, everybody. Introduce Uri Gutfreund. We go back and forth and have been presenting on each other's programs. So Uri comes to us from Israel. What time is it there, Uri?
Oh, I don't even know. It's 9 o'clock, 9 o'clock at night.
I've lost track of the time and the day of the week as well.
There you go.
This pandemic has turned us all upside down. Scott Burke. Scott's our ringleader today. Scott manages Morrison Mahoney, 190 lawyer firm, New England offices primarily. His firm's a member of the Alpha Network. So Scott, delighted to have you with us today.
Thank you, John.
And as well, I'm going Alpha by last name, Dan Mayo. Dan is the national lead of the federal tax policy group at Withum, and Withum's 1,100 CPAs. Dan's in New Jersey, and how many offices do y'all have at Withum, Dan?
13 offices around the country.
Wow, you guys are growing like gangbusters. I think last time we had this slide up, it was a lot fewer CPAs with you all. So Dan, glad you're with us. And Dan is an LLM from NYU, not an accountant, but an undergraduate degree in accounting, and certainly knows this PPP stuff as well as anyone. Least, but certainly not least, is Lisa Murray. And Lisa runs the professionals group at Citizens Bank, a Rhode Island-based financial institution, one of the top 25 in the country. And Lisa has her bachelor's degree from the University of Connecticut. And Lisa, although you can't be with us visually, we know you're here. And thank you for working through the technology glitch we're having this afternoon.
Thanks for having me, John.
My pleasure. And as you all know, we like to start off with try to get through our opening comments fairly quickly, dive right into the panel, survey results, questions. Uri, walk people through how they can type in their questions as we go.
Sure. On the right side of your screen, on your toolbar within GoToWebinar, there's a section called Questions, and that's the best place. If you click on that arrow, send us your questions. I'll be monitoring them throughout. And when we have discussion time, I'll be bringing and summarizing them for our panelists and answer as many questions of yours as we can.
Yeah, we try to get to as many questions as you all present live, as well as the questions you presented at time of registration. We really try to go through there and mine those best we can. I think Dan and Lisa and Scott are willing to carry forth the conversation beyond today's program. If you want to follow up, talk a little more about this timely and important topic. Our year-end program, Uri and I are going to don our top hats and black ties and present a program on December 30th, putting forth our predictions for 2021. That'll round out our webinar series for the year, and we're going to resaddle and do some more of these in 2021, probably on a monthly basis. So stay tuned. These have been very popular, well received, so we're going to keep carrying on. When you're ready, this was back in May. Remember way back in May when we were all adjusting to the work at home, and we did our most popular webinar to date. Everybody was lined up for the PPP loans. That's a pretty big number, participating firms. Banks were performing well, particularly smaller and regional banks. Congratulations to Lisa and banks like yours for serving well the legal community. Return to office plans. Remember, we were all working on those. We'll certainly be back by summertime. Well, we're not, but
no, we will be back by summer, John. We just didn't ask summer which
summer.
year.
Yeah. Could be 2022. But folks thought this was a short-term thing and we'd be back in the saddle certainly by the fall. That just doesn't happen. When y'all registered today, we asked a set of questions, 183 responses, and this will frame our discussion, and then I'm going to turn things over to Scott. What is the current status of your PPP forgiveness application? And we'll come back to this question once we turn it to Scott, because I think y'all want to talk a little bit about that. But there's some data to munch on. How much of the forgiveness do you expect to receive? 83% of you say we expect to receive all of it. How's this pandemic affected your profitability in the current year? And some to the good, others somewhat negative. We didn't quantify what qualified as significantly negative, moderately negative, somewhat negative, but there you go in terms of how our crowd today said this pandemic has impacted their bottom lines. First polling question, just get out your voting mechanism, vote early, vote often. I'm in Georgia where we're being bombarded by ads and it's not over yet.
And John has only voted 6 times so far this election cycle, right, John?
I voted absentee, I voted in person, I voted lots of different and in 2 states. No, I'm kidding. Our first polling question, if y'all would go ahead and weigh in, give our audience a sense of firm sizes on today's call. Let me launch our poll. We have 3 polling questions today. This is our first. So if you guys could go ahead and tell us the number of lawyers with your firm, and that'll help Dan and Scott and Lisa a bit, I think, in terms of framing their comments. We're at 80% voting, and 4, 3, 2, 1. I'm going to lock it down. We've got 83% of you in, and here are the firm sizes represented today. Quite
diverse group, John.
Quite a few. Yeah, it really is all over the map, isn't it? But there we have that. And Scott, let me turn our program over to you. Thank you very much.
Well, don't go too far, John, because we may need you. Thanks again. Great introduction and great questions. So this slide is an interesting one. I'm surprised to see how many fellow firms that are funded but have not yet applied for forgiveness. On the one hand, that's good because hopefully we'll give you some information in the course of this program that will help you as you go through that process. But I did want to turn it on to our banking expert. Lisa, I'd be happy to change my screen with you because I'm sure people would much rather see you up here than me if there was a way to do that. But as the banker working with law firms, you were really helpful last May in terms of what you were seeing in terms of applications and approvals. What are you seeing in terms of applications for forgiveness, that process, and the timing of it?
Yeah, so that's a great question, Scott, and it has been sort of a whirlwind of activity, as we all know. The guidance has been spotty at best and ever changing. So we're really coaching our clients to, unless they really need the forgiveness, a wait and see attitude is not a bad approach, just to make sure you don't have to go back and amend your application on updated guidance. But if you think about it, so just from citizens' perspective, we opened up our forgiveness portal July 8th. So we were ready to go. But the SBA didn't start accepting those applications for forgiveness until October 2nd. So we were sitting on a lot of these applications for forgiveness, working through our process of QCing the data. So when they opened up the portal, we submitted a lot of those applications. So as of now, and the way we did it was we're doing our waves. So we're inviting our clients to fill out the application for forgiveness in waves, and we're processing those. We've gotten through about a third of our borrowers so far. And of those, about 61% of those have logged in and are in the process of or have completed their forgiveness application. So people they're not jumping right on it. And that's probably particularly for firms that have loans over 2 million. That's good because on the 26th of October, so a full almost 3 weeks after they opened the forgiveness portal, they came out with additional guidance of a needs questionnaire to really get behind the numbers to see if you really needed this loan, and what they're asking questions about what your revenue was quarter over quarter, year over year, that sort of thing. So for those applications for over 2 million, which we had already submitted, the process right now is when the SBA gets to that loan, if they haven't forgiven it already, they reach out to the bank and say, hey, we need this questionnaire. The bank then has 10 days to go to their borrower to get them to, we have 5 days to tell the borrower they need to complete it. They then have 10 days to complete it, then submit it to the bank, and we have 5 days to upload it again. And at this point, I'm not aware of any loans over 2 million that have received forgiveness so far.
Out of your lenders, have you under 2 million borrowers who have been forgiven by the
Yes.
SBA? Okay.
Yep, we have. So 31% have been submitted to the SBA, but only about 10% have been forgiven so far. Anecdotally, on a broader scale, now that the portal's open, they're getting about 3% of their forgiveness applications in every week submitted by all the banks. The SBA is processing 1% of those, so a third. And they're not going in linear fashion. They're not going based upon when it came in. You know, we've had some that came in, we submitted them, we got it back within a couple days, and we have some that are past the 90-day mark at this point. So it's really not linear in terms of how they're approaching this. It's quite confusing for both the banks and our borrowers.
Lisa, any sense, I know the SBA is supposed to have 90 days in order to make its decision after the 60-day period given to the bank. Any sense of whether the SBA is going to comply with that?
So they have complied on some of them that we've seen, and we're still waiting on some that we submitted in July. So it really is, up in the air as to how they're doing. They are far, far behind, though. The banks jumped on the forgiveness process, the borrowers jumped on the forgiveness process to a certain extent, but the SBA has really not been processing many of them to date.
So Lisa, it sounds like the queue is growing. 3% coming in, 1% being sent out. That's just going to keep growing.
Yep, that's exactly right.
Lisa, do you have a sense of what happens if the 3509 is not completed by a borrower within the 10-day period?
You know what? That's a great question. It's a fairly new process. So I don't know what we're jumping on our clients. So again, we have 5 days to reach out to our borrowers, and then they have 10 days to submit it. What we did was, when we got the draft of the forgiveness, we would send out the draft to our clients and say, hey, this is what we're seeing as what the form is going to look like. It is not blessed in its entirety yet, so we couldn't upload them to the portal. But we try to give our borrowers a heads up so that they could collect all the documentation. So we haven't really run into too many that have reached that 10-day time frame. So I don't really know. And the SBA is being very opaque in terms of talking about the forgiveness data.
Interesting.
So Lisa, you had commented that if you don't need the money now, perhaps hold off a little bit. And I want to turn to Dan, because I've heard from some fellow managing partners who have not applied for forgiveness because their CPAs told them the landscape's going to be changing, the guidance is changing, let it play out a little bit. And Dan's our expert tax person on the panel. Dan, what do you think about whether to wait or file now?
Yeah, we don't see any reason to wait to intentionally delay it or to rush the application. I mean, we don't see the process getting materially easier for people, other than the tax aspects changing, which again won't affect the application for forgiveness. But the process is set. You have 3 application forms that have been issued. If there's going to be change, it's likely to be at the legislative level, not so much at the application level at this point. But obviously that's a prediction, but we're not seeing a reason at this point to delay or to rush applications.
Thank you, Dan. Can we go to the next slide, please?
We certainly can, Scott.
So Dan had mentioned 3 different forms, and I know my firm and a lot of firms like mine really wanted to try to get away with the short form, the 3508EZ. And Dan, we talked about this earlier. There's a certification question in order to use that form that has to do with FTEs and the fact that you did not reduce FTEs. Could you tell our attendees what this certification means and what the CPAs and tax lawyers are looking at this language to indicate?
Yeah, so this is the Form EZ, and it's a simplified form. And the benefit of this form is that it does not require the FTE or wage reduction calculations to be completed and submitted to the SBA. It's called an EZ form, but there's no limit on the size of the borrower. So you can have a borrower with a $10 million loan, and they're eligible to use the EZ form. So don't be fooled by the title. It's not, there's no size limit.
Not like the 1040.
Right. The key to this form is that you meet these certifications, and there's three sort of entry points to use the form. We'll focus on the one here, which is what a lot of people are relying on. The certification that the borrower didn't reduce salary or wages by more than 25% during the covered period, and also the borrower did not reduce the number of employees or the average paid hours between January and the end of the covered period. These are sort of the gating questions that people need to submit in order to use the form. Very important because they're signed under penalties of perjury, and it does simplify the application, although it shouldn't change the result. So whether you use the long form or the EZ form, the answer will be the same. The forgiveness number will be the same. It's just a matter of easier form to complete and less work to prepare it.
So law firms may have suffered a reduction in FTEs, not because they fired people or terminated people or did layoffs or furloughs, but because they had people that voluntarily left the workforce, retired, people that chose to go to another job. So the concern amongst a lot of managing partners is if our FTEs have dropped by 3 or 4%, not by anything we did, are we able to still sign off on this certification?
Yeah, it's a good question. We get this one a lot too. There's a difference between the substantive rules and the interim final rules, the IFRs, right? Which I know you mentioned on the later slides. So those are the substantive rules that apply to the program, and we know there are exemptions for those cases where employees voluntarily resign or voluntarily reduce their hours. This representation deals with limiting a representation that's needed in order to fill out the application to use this particular form. It's not an interim final rule that applies more broadly to the SBA program. It applies just to this form. And while it's not clear, when you look at the instructions to the EZ form, they give a little more color on the rep that's required in the application itself. And they do focus on the fact that the borrower did not reduce, which suggests that if an employee leaves on their own voluntarily, the borrower can legitimately make this representation because they didn't reduce anything. It happened, it happened to them and not with their consent or voluntary action.
Right, and you mentioned that the certification sort of stands on its own with regard to that instruction, but there is some support for that interpretation of the question in the IFRs as well, and that's the slide in front of you right now. And this is basically where the IFRs are telling us, the borrowers, that we can ignore the reductions in headcount that occur because of resignations or someone that's fired for cause, or someone who voluntarily requests a reduced schedule.
Right. The key distinction here is the exemptions in the substantive rules, or this IFR and where this was taken from, are broader than the exceptions in the application that entitle you to use the EZ application. And so while the substantive rules apply, it's the instructions that govern when you can use a particular form, and they happen to be consistent here, even though they're not written in a coextensive fashion. They're consistent with each other because if an employee leaves, you meet the exemption here on this page. You can also certify to that representation on the EZ form that the borrower did not reduce. So they're consistent with each other.
Thank you. Can we go to the next slide, please, John? So I had attended an SBA program, and after going through some 25 or 30 slides on how to go through the application process, they had this slide quoting incorrectly Abraham Lincoln, one of those urban myths that Mr. Lincoln said this, but give me 6 hours to chop down a tree and I'll spend the first 4 hours sharpening the axe. And that's consistent with what Lisa said earlier, that if you haven't filed your application yet, you really want to dot the I's, cross the T's, and be very careful. You know, if you start down the route of the short form and taking Dan's advice, feel comfortable with regard to the FTE certification, but you get somewhere else along the form and there's a problem, you know, you may want to stop and go back to the long form. You may start getting into the long form and decide to go to the short form. We did it in fits and stops ourselves quite a bit, but we wanted to take our time and make sure we got it right, and certainly urge those of you that haven't applied yet to do that.
You know, Scott, I wanted to ask you guys and all the panel this question, and does this surprise you when we saw these survey results coming through?
It did surprise me. I started to hear about firms applying, you know, back in August. So the fact that we're at the end of the year and half of firms that took out a loan haven't applied yet is surprising to me.
Dan?
Yeah, so it is a little bit, we're inundated with applications at this point, with clients want to get their applications in. We're also doing a lot of work on the 3509s in particular. That's very timely. So I'm a little bit surprised that half the group here has not yet applied. Maybe they're in the process of doing so.
Well, can I ask you to speculate? Why do you think? And Lisa, you're certainly in touch also with your clients.
Yeah.
Why do you think half the people have not yet applied?
I think that Scott's point, he said that some CPAs and others are advising the rules make it simpler. I think people are waiting for rules maybe to settle out, to sort themselves out, to make sure that when they apply, it's the final. It's just one time, they don't have to amend or change the application.
Mm-hmm.
I'd agree with that. I think that there's just been so many, as I said before, fits and starts in terms of the guidance, that people want to see things settle down and not hear amendments for a while before they submit their documentation. I do think most people have started to gather the documentation and think about it, and they maybe just haven't pulled the trigger yet.
I also wonder whether recent publicity may be causing a pause. Right? Some of the firms that were just about to start, maybe they were aware of the federal court decision in November that might have required the disclosure of names, so they were going to hold off, and then the names were disclosed, and maybe that publicity is causing some firms to decide maybe we don't want to be at risk here for publicity for actually being forgiven for the money.
You know, Scott, I pick up on that too, particularly dominant firms in smaller markets. You know, they don't want to be on page 1 of the business section in the court of public opinion on this. So,
yeah, we saw a lot. We saw quite a few firms, both in our legal portfolio, but in our broader portfolio, that when that started to become a rumor, they rethought about it and preemptively repaid their loan.
Shall we move on, Scott?
Yes, that'd be great, John. Thanks.
Next slide.
Can I interrupt with a question, just because we got like 20 questions on a slight nuance. I'm not sure it was meant by the panel earlier. Please. So on the $2 million loans that have been, so I think none have been forgiven. I think that's what everybody said. Have any been rejected? That's like 20 people just asked that question in the last 5 minutes. Have any been rejected as far as you know?
I have not heard of any. But interestingly, of the loans that have been forgiven, 45% of those are under the $50,000 threshold. It's that easy form. So they really started processing those, because those are the sort of the quote unquote no-brainers.
Those are the auto approves, right?
Yeah, exactly. So those are the ones that are just flowing through the system. I have a couple that were in between $1 million and $2 million that I've seen come through and be forgiven. We have not, as of yet, gotten any pushback from the SBA on our recommendations. So the bank has to go through and say, yes, I believe this loan qualifies for full forgiveness. We have not yet gotten any pushback on any attestation that we've provided, at least here at Citizens.
Yuri,
Do you sense they're rubber stamping it, Lisa, or are they actually looking at this stuff?
No, they're looking at it. They'll come back and ask for questions. Luckily, we have a pretty good team here that we built after the application process. Knowing how rough that process was, we, in the interim over the summer, built up a whole team of contractors to review these applications before we submit for forgiveness. So we are catching a lot of it on the front end before we submit it to the SBA. And then we have had some situations where the SBA has come back and asked for additional documentation, and we liaison with our client to get that. But again, knock on wood, so far we've been pretty clean.
And we have a consistent observations here. We haven't seen any loans approved over 2 million yet. We haven't seen any over 2 million rejected. We're seeing, I don't know about Lisa, that's consistent. We're seeing a 45 to 60 day turnaround from the date it's submitted to the approval. And I'm curious, Lisa, too, the 3509 for the loans over 2 million. Are the banks doing anything with them other than just transmitting it to the SBA?
Oh yeah, we're reviewing those. We're reviewing those very closely because again, they're going to be under higher scrutiny. So again, we have folks that all they do all day is sit down with the application and tick and tie the numbers and the documentation, make sure we have everything, and then we submit them to the SBA. So yeah, the banks do have some requirements, some oversight requirements with regards to being able to substantiate the data. We don't have to confirm that data is accurate. We believe whatever the borrower tells us, but we have to make sure that the numbers tie out.
So it's just a processing function on the 3509, like the application. There's no judgment, though, as to whether a loan, should be forgiven or not, or whether eligibility determination is made.
So we have to make a recommendation as to what if we think that they have provided the documentation for forgiveness.
I see, but you're not addressing eligibility based on the 3509, saying, we don't think this borrower was eligible for the loan, anything like that?
No.
Got it. Okay.
So as a law firm, you're going to be informed by your bank, hopefully, that the bank has approved your application, and then it gets submitted on to the SBA. Is a bank going to receive some notification from the SBA that it has received the documentation from the bank and that it's in some sort of queue?
Yeah, so we're tied in with the SBA, and once we upload the forgiveness application, it goes into a pending status. And so while it's in the pending status, that's as good as you're going to get. And then we do get notified when they reach a decision if they forgive it. And then within 10 days, the bank receives the funds for the forgiveness amount. But our clients are on the same portal as we are, so we get notified at the same time our clients get notified of the status.
Okay.
And Lisa, just curious, how many law firms do you bank in terms of a PPP loan? Just to put it in context. So
that's a tricky one because, we have, for the larger firms, we have the commercial, and then with smaller firms, they may be on sort of a retail platform, so we don't have a holistic. But we probably processed about 100 loans on behalf of our law firms across the footprint. And many, many more on the smaller side of the business, the five or six partner firms.
Beautiful, thank you.
And I'll just say, John, to answer your question, based upon a few hundred managing partners that I communicate with on various listservs, including yours, I'm aware of one firm out in Utah where they've received forgiveness. I don't know the amount of money, but I'm confident that it's under 7 figures. And I don't know of anyone that's been rejected. So the 10% that we saw in our survey here today, and the 10% with Lisa's experience, that's actually more forgiveness than what I've seen from my colleagues.
Anecdotally, there was a report that said 1,400 law firms requested a PPP loan.
Boy, that seems low.
1,400 more than 2 million, maybe?
Yeah, it just says 1,400 law firms in U.S. received assistance.
Huh.
That seems low.
It does.
Just to me, interesting. Scott,
So,
you ready to advance, or you want to?
Let's talk about this for a little bit. We've talked about the loan necessity questionnaire a little bit, the form 3509, and I just don't want to lose sight of the fact that when the bank sends it to you officially, if you have a loan that's over 2 million, you're going to have 10 days to complete it. And this form is a bear. And as Dan mentioned, his firm is helping clients complete this form. You want to get a draft of it in its current iteration. It may change by the time you actually receive the final version, but at least the information that you've already completed will be transferable. But it does ask for a lot of specific information about revenue, comparing your 2019 with your 2020, at least for Q2. It asks for very detailed information about government orders that have required you to change your operations, to close offices, vendor continuity, lots of detailed questions, liquidity assessments that, quite frankly, I think seem more geared toward stock-held companies, publicly traded companies, but there may be questions in there about dividends for professional corporations that apply. It's messy, and quite frankly, I found it to be a little bit difficult to complete because some of the fields say you're limited, say you're allowed 1,000 characters or 1,000 words, and I find that it shuts me off even before I finish it. If I leave the form and come back, then it lets me put in some more. So if you don't have this form, I would contact your bank and ask for a draft.
Scott, what I've said to some clients talking about that, I've said that, you know, while we recommend you stay within that 1,000-character limit, if you do submit an attachment, your form doesn't self-explode, right? So, it's not like and it's not like a court rule where there's an ethical requirement to comply with a page limit, and there's no ethics rule on not, you know, attaching an extra sheet. And so while we're not recommending people attach 10 pages, if necessary, attach a page with whatever is necessary.
Yep.
Mechanically, is there a way to do that, Lisa? Because it almost seems like this is an online form where they don't let you add a document to it. So I would love that opportunity.
Yeah, so we do have an upload document functionality, mostly for your supporting documents, but you can also reference in your application that there's supporting, that you have added supporting documentation on the back end.
That's great to know.
Yes, it is.
And by the way, I missed, it's 14,000 law firms.
That's that comma.
Kind of left off a zero there.
That sounds more.
That sounds better.
Yeah,
Okay.
the 3509, Scott, you mentioned the 3509 is a lot of work. It is a lot of work compiling the data, but also, as you say, to address the qualitative questions, it really does take time to tighten the answer, to get it right, to run it by management. And so we are, again, stressing to clients, you're going to need more than 10 days, most likely. So start it as soon as possible.
So that's a great point, Dan, and this may be a good moment to sort of let people know, especially if you have a loan of over $2 million, there is insurance available with regard to your necessity certification. And for more information on that, get in touch with Yuri by email after this program. But as part of the insurance process, one of the things that I found really helpful was to start to put together a chronology that I had tried to keep during the pandemic of everything that was happening in the course of our business, the orders for each of our offices in each of the states, illnesses that were causing people to be hospitalized or causing us to close offices, and to go back to emails and recreate that. Clients who have said, you know, you have to stop work on our files, we're reducing your rates by 25%. Starting to put all of that together in a chronology made it a lot easier to come back to that form and fill in the highlights. But like I said, I was limited in terms of characters, so now I need to go back and embellish that a little bit because I had to leave a lot out. But that insurance product is a product that can, if your loan is not forgiven or a portion of it because of an issue with a necessity certification, you can get some coverage for that. And that may give you some great comfort in terms of these decisions about distributing money at some point down the line when it is forgiven. Next slide, John.
Scott, when you talk about that form, it brings to mind, you would probably know the expression better than me. It's been a long time since I was a litigator. The judge asks for a brief and the lawyer says, if you want the brief in under 10 pages, I can do it in 2 weeks. If you want it under 5 pages, I need 4 weeks.
Right.
And that applies here too. It takes time.
Yeah, it's nice to be forced to be short and clear.
Yeah.
So one of the big issues that firms have been dealing with since the summer is this IRS ruling regarding taxes and the deductibility of expenses paid with forgiven PPP funds. And now it's gotten even more confusing. So Dan, can you fill us in on on what the technical impacts of the revenue rulings are?
Yep, sure. So the revenue ruling, again, came out in mid-November. The revenue ruling is consistent with the notice that came out, I think, in July of this year. So those two are consistent. They're unfortunately on the, you know, if people read the internet and they see a lot of positions out there taking other views. And so I think the revenue ruling now is to put the nail on the coffin on a lot of those alternative views that have been out there. I was getting calls occasionally saying, you know, people wanted to take a position against the notice. They'd call me and say they went to a webinar, they heard a webinar on the internet, and the person said you can disregard it. And then I say, well, show me the slides, and they send me the slides. And in one case, they had the word arguably listed 4 times on one slide. And I said, well, it doesn't sound very bullish on the position. Again, the revenue ruling, since this ruling came out, I think it's now become more accepted. And again, entirely consistent with the notice, which is, so 2 scenarios they addressed in the ruling. One is you apply for forgiveness in 2020, get your decision in 2021. And the other scenario is you don't apply in 2020, but you expect to apply in 2021. And it's the same answer for both. If you expect to receive, say 100%, whatever number of forgiveness, rather, if you expect to receive 100% forgiveness at the end of the year, so they picked the end of the year because you know all the facts, right? You know how you spent the money. You have all the facts within your possession. If you reasonably expect to get that forgiveness at the end of the, make that decision based on the rules as you know them, then you will have disallowance of the expenses in 2020, regardless of when you apply and regardless of when you get a decision. So that's going to be important. Most people, right? Most people's covered period is over by now, so they know how they spent the money. If they reasonably expect to get full forgiveness, the disallowance occurs in 2020, which means that they will have to pay the tax in 2020, subject to you know, discussion a little bit later about what's going on in Congress. The other thing, so the question then becomes, when you look at the revenue ruling, who can disallow expenses in 2021? Can anybody put it off, right? Can anyone say? And so the answer is only someone who says they have no reasonable expectation of forgiveness at the end of 2020. Now, you know, we do a lot of work for law firms. Some of them are more aggressive than others. You know, we've had clients come to say, well, I don't expect to get forgiveness. And I say, well, why? What's your reason? And I say, do you intend to file a forgiveness application with the SBA? Well, yes, of course. I said, well, under that application, you're going to certify under penalties of perjury that you meet the requirements of the program and that you expect to receive full forgiveness. So if you could just write me a short memo as to why you don't think you have a reasonable expectation. And so I think that puts the matter to rest with most people. There's also a couple things they need to consider. So one, you're filling out an application under penalties of perjury. So the other thing is, if you have financial statements, you may be making a claim on that statement for accounting purposes. If you're using the grant method, you're making a statement that's probable you're getting forgiveness. And the last thing is your tax return, right? You're taking a position on the tax return. So we don't think that, you know, there may be some people who say I have no reasonable expectation based on either maybe FTE reductions or something, but it's hard to imagine a scenario where someone does not have a reasonable expectation of what they're going to get. It may be 30% forgiveness, it may be 50, but whatever that reasonable expectation is, that's what the expense disallowance will be. And then we go to the next slide, we'll talk about how to adjust it if the facts turn out to be different than expected. And this is the revenue procedure, came out the same day as the revenue ruling. And what this does is it provides a safe harbor for taxpayers to deduct the expenses relating to the PPP. And so this is sort of the change in expectations. What happens if you had an expectation and it turned out differently? So what this applies to when you look at eligible taxpayer there. So this is the type of taxpayer which is virtually everybody. You incurred your expenses in 2020 and you reasonably expected loan forgiveness at the end of 2020, right? So let's say you expect 100% forgiveness. Either you apply for forgiveness in 2020 or you're busy, you're going to get to it next year and apply in 2021, but you intend to get it done. So here are the two scenarios. One, you either learn in 2021 that your application was denied in whole or in part. So let's say they granted you $800,000 of forgiveness instead of $1 million, which is what you expected to receive. Or you decide in 2021 you're not going to apply at all, right? So you thought about it a little bit harder and said, we don't think we qualify, or the 3509 scares us, we don't want to have to fill that out. we don't want publicity, whatever reason, they're not going to apply. So there's a change in expectation now. Either the SBA ruled differently against you or the bank, or you change your expectation about applying. So what do you do? When do you make that change? So take the case of $1 million loan. The SBA and the bank come back and say, we're only forgiving 800,000, not the million. What do you do with those 200,000 of expenses that you denied? When do you take them? And so this revenue procedure is a safe harbor. It's very flexible. It provides a very helpful position for borrowers. And it says you can take it in either your 2020 return, your original return if you haven't filed it yet, if it's February or March, let's say, or you can take it on an amended return for 2020, or you can add those expenses into 2021 if that's more favorable for the borrower. So it allows this extreme flexibility on when you can take those additional expenses that were disallowed in 2020, but it turns out you didn't get the forgiveness amount you expected.
Very clear, Dan. Thank you. Now, I think this is probably the first webinar I've ever done where I hope that the conversation that somebody just had, we can completely disregard. Right? I'm hoping that Congress does something to change this. Right? As you all know, the CARES Act said that this money once forgiven is not income to the firm, and then the IRS undoes that, not a complete whitewash, but really takes a lot of the benefit out of the CARES Act by not letting us deduct the taxes. I've been pursuing since the summer whatever news that I could, and if we could go to the next slide, but not play it yet. So let me just sort of set this up. Representative Richard Neal is the chair of the House Ways and Means Committee. He was one of the key drafters of the CARES Act. And I've been, since summer, going to some of the people on his staff to find out what was happening. The IRS ruling that Dan spoke about was undone by a House bill, their HEROES Act bill last summer that was not brought to the Senate. Then things have been pretty quiet about it. Richard Neal came and spoke to the New England Council, which is a New England group of companies that get together and actively lobby and have relationships with our elected officials, state and federally. And one of the questions that was posed by me to Richard Neal was right on this topic. So I want you to hear directly from his voice what he thinks is going to happen on this issue. And when he talks about the secretary, he's talking about Secretary Mnuchin. And when you listen to the congressman, think about the idea of what's going to happen in terms of forgiveness going forward. What do you think, listening to him talking about the next administration, the impact of a new administration and a new Secretary of the Treasury may have with how necessity is viewed going forward? So basically, Congressman Neal was asked, is this going to be undone? Is the IRS ruling going to be undone?
Juan, you're up. Roll tape. Can't hear it. Can you guys hear that?
No.
Can't hear it.
Worked in the dry run. Surprised it's not working now.
That's
So did my ad.
Where does passage of this stand? How confident are you that it will be enacted so that businesses can reap the full benefit of PPP loans as Congress intended when it passed the CARES Act? If a PPP deductibility provision does not pass in 2020, since businesses will not be filing 2020 tax returns until 21, might it be something on Congress's agenda for 21?
For sure, and I'm optimistic we will fix it. I think that the Secretary, in this case, is mistaken on the interpretation of the congressional intent. And what's interesting is that Chuck Grassley, Ron Wyden, myself, and I believe Kevin Brady, we're all on a letter suggesting to the Secretary, you knew what the intent was, you need to abide by it. So we'll follow up on this willfully and assertively, I can assure you. It's important to remember when we did this, that we knew what our intent was, but we were also trying to buy time. The pandemic was raging, and we wanted flexibility, and we informed the Secretary of such. So it's one of the first conversations I intend to have with the new Secretary of the Treasury, which we will likely get to know in the next few days.
That's right.
Thank you, Juan.
Thank you, Juan.
So when I heard Neil's comments, my first thought was we're probably not going to see anything on this in December, and it's likely that in January this would be taken care of administratively by, we now know the Secretary of the Treasury is going to be Janet Yellen, and I could see Richard Neal and the House Ways and Means staff working with Janet Yellen to get the IRS to overturn all of the bad stuff Dan just told us about. Since hearing from Richard Neal, I can let you know that the House bill for stimulus does include an undoing of the IRS action, and the Senate, in sketching their version of a stimulus bill, has covered one tax issue, and this is it. So if they can get their act together, we have both the Senate and the House. We have both Democrats and Republicans who are providing a high level of confidence, I think, that this will be fixed in whatever bill gets passed. And if it doesn't get fixed by congressional action, I think we will see something administratively. And when you hear Congressman Neal talk about doing something aggressively and quickly, there's a lot of talk about this. It's something that's on their radar clearly.
Uri, how we doing questions? Anything coming through that you think is worth bringing in at this point?
Well, I've asked for, and we've certainly discussed the 3509 in depth. The one question, this is the 2 million plus question, I think, which is, do you think it's going to matter? So the 3509, it's asking questions people did not contemplate in March and April when they applied. We've got a number of people asked, do you think this is going to move the goalpost? Do you think this is going to impact? It hasn't happened yet. I mean, everyone said that, but will it?
Well, one thing about the 3509 in terms of revenue is I believe it still is only asking questions about quarter two and comparing quarter two to quarter two of 2019. And we saw in the survey question earlier that lots of law firms by the end of the year described doing at least just about the same amount of business as the prior year. But the 3509 doesn't ask how you've done in the entire year. It's just looking at how you've done for that quarter. I don't know whether the file reviews or the audits that the SBA has supposedly promised coming in a year or two will look at things more broadly. But when I hear Richard Neal speak, I really am hopeful for an administration that's going to stay the course. The PPP was enacted so that entities and law firms would keep people employed, not furlough them. I know up in the Northeast with courthouses closing, depositions not happening, mediations not happening, transactions not happening, law firms were freaking out, quite properly so. And I think other parts of the country, it maybe happened later than that. But at the time the CARES Act was being passed, we were very nervous. Firms were ready to do furloughs and layoffs immediately when news about the PPP started to come about. So to not have furloughed or laid people off because of the security of the PPP funds, and then hold it against you at the end of the year because you've done close to what was expected, well, you would have laid off and furloughed people and done better for your partners, for your owners by the end of the year. And we were foreclosed really the opportunity of doing that by accepting the PPP loans that were offered.
Yeah, Yuri, I get that same question a lot, to like what Scott's saying. And the way I tell people is it's not an IFR, right? That's how they announce rules with the program, through IFRs and FAQs. They haven't done that here. And so I don't think this is moving the goalpost so much. My own sense, and again, I'm speculating here, is that the form is going to be used as a screening tool. And they want to sort of weed out the people they think are most susceptible to an enforcement action, right? So they want to get the loans that they think are the most abusive, and they want to attack them first. And so I was talking to a medical practice today about the 3509, and they had a lot of cash on hand. Let's just phrase it that way. And they said that maybe they were asking about the NIACS code, and they said, why do they want this code? Why do they want to know? Maybe because they know doctors are helping society and that they're not abusive. And I said, I don't think that's why they're asking for the code. My own sense was, I think they're asking for the code because they want to bucket these things. They want to bucket all the medical practices, all the law firms, and then they want to be able to look at them as a group and say, who are the most abusive in their view, whatever they view as abusive, and then start actions against them. Maybe either they start some kind of enforcement action, or they just start denying loans, right? They may just start denying loans and leave it up to the borrower then to go challenge and try to litigate, right? And I don't know that there's going to be a large appetite for litigation to get forgiveness on your loan, particularly among the law firm community, right? I don't think they have an appetite to go in the press and start litigating why they needed forgiveness on their, $3, $4, $7 million loans, or 10.
I think there's actually even another aspect of this, and it's the optics. So if you remember, early summer, there was just this outrage about some of the entities that had taken large PPP loans, and people were criticizing the government for not putting more guardrails on who could be eligible. So I think a little bit of this is a CYA, so they can go back and say, hey, we went to these people who took these large loans and we asked them specific questions. And I do think it was a little bit of a defensive move to show that they are enforcing the oversight.
Yeah, to also, the AICPA wrote a great letter on this. So they talk about the overreach in the form, and they're seeking information that's just not part of the program, as Scott was mentioning. The rules did not say you have to have a loss in revenue in order to qualify for the PPP. It talked about, your good faith belief at the time you signed the loan application. And look, the second round of the PPP may have some kind of revenue decline requirement in order to get into it. But it just wasn't the case with the first one. And again, I was talking to a medical practice this morning. They had a decline in surgeries, for example, in the first couple months in starting March, April, May, but then there's a backlog, so things picked up. And the same thing with the legal practices, right? The problems didn't go away, they just got deferred.
Yeah, to your point, Dan, the early info on the PPP4, if you will, is that it will be limited to companies with 300 employees or less and who had revenue declines. It started out at 50% and is now at 30%. So you're exactly right that's, again, this is preliminary at best, but that they're definitely talking through those sort of nuances so that they can, again, improve the process and improve how the money gets to those that are really, really in need.
And Dan's point is a good one, making the analogy to physicians, right? I know a lot of doctors who were out of work for 2 or 3 months, but they have told me that by the end of the year, they will have done the same amount of surgeries as they did, because ORs are operating until 10 o'clock at night. They're doing elective surgeries on weekends. All conferences were canceled. They weren't taking vacations. And you can look at any industry and see that. I know accountants, for instance, who were slow for quite a while. The PPP has been a whole side business for them. So, a lot of accounting firms, I think, that were expecting to see a decline in revenue because there'd be fewer transactions happening, fewer deals, have made it up because of all the extra advice that's been needed with regard to the PPP itself.
Yeah, folks, I gotta, unfortunately, I'm looking at the clock, and we're at that time, and we got a couple of polling questions to take us out, and then a few announcements. But thank you, Scott. Thank you, Dan, Lisa, for a really timely and hopefully helpful conversation for the folks that listened in. We'll be recording this and highlighting it in our newsletter going out Friday. And we'll do some handouts, some articles and such that our panelists will have contributed. So again, thank you very much, Dan and Scott and Lisa. We really appreciate it. Uri, let me throw up a few polling questions here real quick, because people love this stuff. And, you might want to share with your executive committees or your partners. And this first is, we asked this question in May. What do you think is going to be the long-term impact of this? And I thought it'd be interesting to compare what folks have to say now as opposed to how we might answer this question earlier in the year. So How do you think your firm's, I'm sorry, I messed these up, your profitability for next year?
2021.
In 2021, yes, sir. And we're in at about 80%. And here's the answer to that question. And we'll put one more question out there, and I messed up the order, and that's the long-term impact of this pandemic on the profession. You think things are gonna get back to normal over time? We're seeing an acceleration of some long-term trends. We are fundamentally changing the practice of law as we know it. Or you know what? I'm really not sure. This will be our last polling question, and then I'll invite Uri to take us home, and we'll call it a day. So again, about 80% of our registrants in here on this question. Overall, back to normal, 13%. That's kind of surprising. 1 in 8. I think that's the wrong direction, and we need to be seizing the day, leaping forward, as Winston Churchill said. And I think this quote is attributed to Winston Churchill: never let a good crisis go to waste. So, Uri, why don't you take us home?
Sure, John. You can advance to the next slide. You know,
Yeah,
one of the things that this is so interesting that we've seen at firms, John, and we've seen this on so many, is that PPP is just one example of firms really drilling down into their firms profitability, into their firm's operations, and it certainly bleeds in. PPP is just one example this year of where managing partners really drilled down and looked at all the finances of the firm and said, we need this loan, we don't need this loan. Well, that has a lot of implications. And I think, John, at our next webinar at the end of the month, we're going to go through a lot of that. We're going to go through what have we learned this year? How have we changed this year? And it's a phenomenal change in such a short amount of time, from billings, collections, marketing. I mean, so much has changed. 2021 has been quite the scary year coming out of this one. And so it's really a lot of challenges left for these managing partners. And this has been a great program.
You know, we've done some programs on the return to office and going to a more virtual model and accommodating lawyers who want to work remotely full time, as well as lawyers that want to come into the office full time, and everything in between. And certainly technology, being more disciplined in our basic hygiene, time management, billing, collections, internal communication. Some good things happening. Let's not let these changes go kind of revert, quote, back to normal. Let's sharpen our focus and learn from this to become a more profitable and sustainable enterprise. This is some of the advice we've been suggesting to managing partners. All eyes are on you, and people are watching how you're reacting to this. I was just reading an article talking about how, you know, credibility of leadership is really, really important right now. So step up, lead, don't hide. People are looking to you. You're having an impact, and we've got some resources out there trying to help managing partners and law firm leaders. This webinar series, we do in-person events. Hope many of you will be there. We're going to try to pull it off, you know, May 5 and 6 in Atlanta. We'll see. We seem to be right on the cusp of when folks think we'll be, you know, kind of getting back out and going places and doing things. So hopefully we'll pull that off. We've got a listserv. Scott mentioned it. So please avail yourself to our resources. We're here to try to help managing partners, very challenging roles, rapidly evolving situation. And as we know, lawyers aren't necessarily eager to embrace change and risk. So please feel free to contact any of our panelists today. And thank you again, Scott, Lisa, and Dan, for an excellent conversation. Here's their contact information. We hope to see you at a future webinar. And Uri, good to be with you. And thank you, my friend, for your hosting duties today.
Thanks to all of you. Thanks to Juan as well. Take care.
Yes. Thank you,
Thanks,
everyone.
Stay safe.
And,
Thanks, Lisa.
we will be in touch. Yes. Stay safe. Happy holidays, everybody.
You too.